Hey, good morning, everyone. We're so excited today to give you a presentation on creating a budget using Pareto principles. And one thing we're committed to at Mellinger this year is we are really committed to giving our clients more value, right? And what I always tell people what a coach and one of the things we want to do in that value, of course, hey, we're going to do your tax planning, we're going to do the work that we're doing for you, right? But we also want to do more business coaching, right? And a lot of that's going to be through webinars, right? So I always say that a great coach will do one of three things, right? They'll change the way you think, they'll help you make more money, or they'll increase the quality of your life, right? So, and we've had a lot of people that we've coached that had all three things happen. But today is really going to be focused on helping you make more money. And we're going to be talking about something that sounds very boring. I like to use the sexy term called forecasting.
There
Forecasting
you
sounds
go.
much more sexier than budget, but we're going to be talking about budget creation. And a lot of times, I know entrepreneurs, myself included, especially sometimes, we just look at our cash balance and we do our expenses based in our head, right? And what's really important about a disciplined business is you need to know your numbers, right? You need to actually know your numbers. And we're big about, hey, accountants, we're always going to look at the past, right? But we really want to be able to predict the future, right? And great companies are able to predict the futures. If you think about all the publicly traded companies, they have forecasts. They expect, hey, this is what we're expected to make per share, right? Hey, we don't got to get it that detailed. We just got it, like Travis will agree, we just got to get it in the ballpark,
That's right.
right? But the thing I like about budget or forecasting, we'll interchange those a lot. So just think the same. They're slightly different. Travis will explain that as he gets into the presentation. But when you put expectations and constraints on your performance, you have both a target and a reason to regularly measure progress, right? And then one thing about the forecast, it always puts you in a future mindcast, right? And I'm a big believer, to create the future, you have to predict the future, right? Because if you don't predict it, guess what's going to happen? Whatever happens, happens, right? The future is going to happen whether you predict it or not. But when you predict it and try to actually influence it, much more likely than not, you're going to get close to your goals, right? Historical information is necessary. But again, a lot of times this year, what we're doing, what I'm teaching you is what we call zero budgeting methodology. And zero budgeting, what that means is, hey, let's just pretend we were starting over, right? What if we didn't have to spend any money, right? And the reason I'm saying that is because we're in uncertain times, right? The title is This is Forecasting in Uncertain Times. We've got interest rates going up, yet the Greenville economy is just booming, right? So we don't know. Should we be hiring people? Should we be firing people, right? What is going on? Because a lot of people are predicting that there's a recession in place. But again, third quarter predicted pretty good growth, right? So planning your budget should consist of both plans of both revenues and expenses. Okay. Envision how your business looks under various scenarios, then imagine what it would be with various tweaks. Now, Travis, tell us
Yes.
what your involvement is in budgets and forecasts.
So typically, what I'm involved with is we kind of start from the beginning. It's always different for everybody, right? Every business is different, every person's different. But at the core of it, like Mike mentioned, you kind of look at a few basic things, right? We start with revenue, um, and that can be different for everybody. Sometimes you are a service-based business with a lot of you know, um, contracts in place. That's going to make you very different from a manufacturer or from a construction company, right? So we'll have that discussion, and we'll talk through what you need to do, how you plan, how far out you can plan, um, and then from there we get a little deeper, right? I will talk to you about your labor, what you're going to have involved with your primary expenses, and then from that point, once it's set, we can have a regular discussion to discuss, okay, this is what we plan for. Okay, Mike mentioned the difference between a budget and a forecast. You have your original budget. That's your plan, right? We start that at the beginning of the year or at the beginning of a half year, whenever we come in and start talking. And then we have our forecast, which is your budget, right? Your plan, but it's updated every period, right? Whether that's monthly or quarterly, whatever's best for you. And we can kind of forecast where your end of the year is going to be and on into the future with using your actual results, right? So we
Right.
have our three basic pieces there. We have our start, your plan or your budget, your forecast, which is updated every period with your actual results. So those are three key pieces that we have to keep an eye on at all times.
Yes, and it's really important. Like I said, the big thing about a forecast, the big difference between a forecast and a budget is static. It lets you know what your original targets are, like Travis was saying. Forecast is updated. So let's just say, for example, and we have companies that do this, right? Let's say you blow out your sales forecast, or your sales budget the first month. Well, everyone's going to be resting high on their laurels, and you're going to miss the opportunity to grow, right? And so you got to redo your forecast based on what's actually happened. Hey, we got this big customer, we got this. Other hand, let's say you completely miss everything, right? Well, guess what? There's no reason to give up, right? Don't wave the surrender flag. Hey, let's redo our forecast and let's look at what the reality is. One of the big things that successful people do is they identify the brutal facts, right? Gosh, hey, we start out with this budget, but we lost our biggest customer. Gosh, we had this, but this job got canceled, right? Okay, cool. So Travis, the first thing that we do, and this is where we rely on the client a lot, but we do have some tools that we're going to recommend, is we always do a sales forecast. Now, at a CPA firm, it's relatively easy to do sales forecasts, right? We've got clients. Unfortunately for you guys, most of the work we do is reoccurring, right? If we're doing annual outsourced accounting, that's a monthly bill. If we're doing your tax, that might be a monthly bill, and we've got different things we have to do. So we can predict, generally CPA firms are great because we can predict 75 to 80% of our revenue is going to be reoccurring, right? And then the other work is predicting. But one thing we do use is we use a software, and I recommend everyone have a CRM called Pipedrive, right? And if you're a two-man show, if you're a three-man show, or if you're yourself, what you should do is you should be looking at your CRM, right? You should look at your past sales and say, okay, what's going on? What do we expect to do with these customers? And then you should mesh the two with your pipeline and say, okay, what do we expect in sales the next quarter? What do we expect the sales next 6 months? What do we expect the sales to be in 12 months, right? Travis, do you have anything on that? Do you have something for sales forecast, or you want me to share our sample pipeline, or you guys?
The truth is, I prepared all these different scenarios of, hey, what it might look like, if we were to do this. But Pipedrive kind of does that for us, because everybody's different. We could sit here and I could show you models and we could play with it, but the truth is, Pipedrive is where it's at.
Right, and so I'm going to share my screen for 1 second. I'm not going to share it yet because I got to change I'm going to do it to our little. Oh wow! So hey, I'm going to share our sample. This is just a sample Pipedrive to show everyone how you do it. But what's nice about Pipeline? Let me go ahead and share my screen. Is boom. What we've been using it for a couple of years. We've been very happy with it. Unfortunately, are you guys seeing these toolbars? My other screen's not working. But hey, so this shows you, hey, I have $768,000 in the pipeline, right? But it also, Pipeline lets you customize the actual sales process, and it also lets you put a percentage of what you think the deal is going to get, right? And so, you can go in here and you can say, hey, on a weekly basis, hey, I made contact with Amy Harris, right? I made contact with Joe. The site visit, hey, this guy we made a proposal to, right? And then, the big thing, it lets you visually know, like, this is our sample one. So everything there's been no activity on this for a while. But when we're in our sales meeting, we can assign this to different people in different stages. Like me and Travis, we have a sales meeting every week. And we talk about, hey, what's going on in the litigation world? We do some litigation evaluation work. And then we talk about what's going on in the different pipelines, whether tax, business advisory, and stuff. And from that, we're able to get some really good reports and stuff. So right now, we are able to predict, hey, we know revenue's going down in some areas. And yet at the same time, we also have a really healthy pipeline, and we're expecting the business to grow. So
one extra thing here is you can have multiple pipelines. So For your business in particular, you may have multiple lines that you want to track.
Right.
You don't have to keep them all in one spot.
So we have, like I said, we have about 6 or 7 pipelines that we monitor and track on a weekly basis. So what we're able to do with someone like Travis, since he's heavily involved in litigation valuation, he comes in the beginning of the meeting, gives us updates, and then he gets off, right, and so forth. And then, but Pipedrive is a great tool. Okay, so once you get your sales forecast, right? Another thing too, and this is if you're in construction or building, generally service business, the biggest expense is labor. But if you're in construction or building, your cost of goods sold can be your biggest predictor. And me and Travis have run multiple samples of hey, if you can lower your cost of goods sold by 1%, it usually has a much bigger impact for construction companies than lowering your operating expenses by 1%, right?
Or
So,
by even increasing your sales by 1%.
or yeah, sometimes even increasing your sales by 1%. So, if you're in construction and some of the stuff that your vendors are using is going down, you need to be more active about asking for price. Hey, we need some price concessions and stuff like that, because that's the biggest way. With that said, generally speaking, the next step, we do our sales forecast first. Then the second step, what we do, Travis, is hey, let's look at a labor forecast, because for professional service businesses, labor is our Pareto expense, right?
Truth. Absolutely. And, Mike got to do the fun thing about sales. Now I'm going to talk to you about, spending money. So for those of you who are Office fans, you'll probably notice some of these names. So that's just my one little piece of fun here for everybody today. But yeah,
This
if
is how
you just,
accountants have fun.
yeah,
We're living a pretty boring
spreadsheets.
life.
Yeah. But it's better than nothing. But no, for a lot of companies and a lot of clients that we deal with, you can do this on a line by line basis. For those of you with multiple employees, this may be easier to do in pools or batches, related to whether it happens to be production or admin, whatever it is.
Right. And what Travis is saying, let's say, your client, you have 170 employees or 150. We work with clients that have 3 employees to anywhere from 100, 200 employees, right? And it might not be feasible for you to do a 200 person labor forecast. For me, I think labor forecasts are feasible up to 40 to 50 people, right?
I think that's reasonable.
Yeah, and then after that, you want to sort of group your employees and come up with groups. Like if you're heavily, let's say you have supervisors, right? You could put your supervisors in one. You could put your line workers in the other. You could put your field technicians in one, and then you could sort of forecast it out based upon that. Another good thing is if you get your payroll reports. It's always a good. You always could look. For a reasonable test is once you do your forecast, you can look. Why you really want to do this, there's 2 reasons you want to do a labor forecast. One, if you're expecting some growth. 2, if you're expecting to shrink, right? If you really think, hey, my sales were very tied to the interest rates and I've got to reduce labor costs, right? Hey, that's when you really start looking, okay, what's it going to cost, right? And then the other side, if you're growing, when do we need to hire people to expand? And in today's market, we'll talk more about this in later webinars. Mellinger is pursuing a technology first, labor second, i.e., we are looking at ways to make our existing staff more efficient because 1, it's very expensive for us to get labor. 2, it's very hard to find right now. And unfortunately, they're saying it's not going to get any easier for accountants, even if there's a recession. So we're looking at different systems that actually make our current staff more efficient or to get them doing, stuff like that. Okay, so Travis, go through generally, what we're going to do is, hey, how many hours is someone going to work a year? What are we paying them? Do we expect overtime? Yeah.
And then you start working your way through all the other costs that are associated with your payroll, taxes, benefits, and you can build in whatever you need to here. whether it's health insurance, retirement, all those things can be added. This is just one example of
Mhm.
how to do this. And you're going to build up to a total fully absorbed payroll, which is not just wages, right? It's total employer cost. What's it going to cost you for that one individual employee? And then work your way up to an annual cost and then just divide it out to make it monthly. And you can do that for each employee. And quite frankly, if you were going to do this in terms of, uh, you know, growth versus shrink, you could do this on a monthly basis and just have
Right.
it laid out and then plan your volume on what it's going to take. If you know that the summer months are heavy for you and you know you're going to need more labor, you can plan for that way. Do this
Mm.
monthly, and then add people as needed on whether you want to look at your averages, like we're looking at here, a monthly average where we're going to need two more guys, so we need to plan for $4,000 to $5,000 more per month, and work your way through it. And again, this can work for any employee. And I know that
Right.
some people have more complicated compensation structures than others, but in most cases, doing something like this is a good exercise just to know what you're paying, what the cost is that's out there right now, and considering what your cost needs to be to reach the level where you're at.
Awesome. And what we find in the service business, I would probably lecture to say that the labor forecast is usually the most tedious part of the forecast, especially if you're going line by line and you got to predict, and you also want to predict potential raises and stuff like that too, because
Right.
that could be significant. In today's inflationary market, we know we saw wages go up significantly, and we also had a lot of our clients see wages go up significantly. With that said, here's where we get to the fun part, right? And this is where, for us, because we're going to be showing you guys how we would look at a expense, right? So Travis basically can create a pivot table where we look at your expenses and we Pareto them, which means we sort them by largest to smallest, right?
Yeah.
And the first thing you notice about that is how many total expenses do we have?
There's a lot. Um, just to get you started, this comes from your QuickBooks file, right? And the report that I use as a P&L detail. And just to give you an idea, we're looking at over 10,000 rows of data to
Hmm.
get this pivot table. So no matter what you've got in your QuickBooks, we can take it and create this relatively simple table.
Hmm.
And in this case, there are 52 categories, some of which are more, utilized than others, which is why Mike mentioned sorting it from largest to smallest and looking at those that have the biggest impact. In this case, we've got approximately 50 rows that are making this up. And there are, let's see, 13 that make up approximately 80% of the total.
Mhm.
Okay.
So
And
it's
that's
really close to Pareto, right? Pareto
yep,
principle is the 80-20 rule, that 20% of your activities generate 80%. In this case, 20% of our accounts are generating 80%.
although I should say this is taking labor out of the equation.
Right. In this,
So,
yeah, labor, well, then you'd have three, right? Basically.
mhm,
Labor sometimes it'd be interesting, but we won't go there. But labor is probably on a service business can be 50% of the
yeah,
expenses, or could be in an ideal world, when you're calculating labor efficiency rate, right? Labor's labor efficiency rate of 2 would be 50% of your expenses are labor,
yeah,
right? So basically, a labor, if you can get a labor rate of 3, it'd be about 33% of your total expenses are labor too. And so we talk a lot of clients are service-based businesses and labor efficiency. I mean, you can operate at 2, you can operate at 2.25, but you really want to get it above 2. So where labor is less than 50% of your expense, or actually 50% of your sales.
yeah, of sales. Because labor efficiency is revenue or gross profit divided by
Mhm.
your labor, which I'm sure a lot of you have heard us mention LER multiple times. So
Mhm.
there's another refresher, and you can see that sometimes we have to refresh ourselves with
Yeah,
some of these ratios and things.
a KPI that everyone should track is labor efficiency rate. You should have a target. You should try to get there, and then you should use that labor efficiency rate to actually build in your next hires, right? What does this do to my labor efficiency rate? Okay, Travis, let's talk about some of the expenses. Now, what's nice about this pivot table, what it does is you can look at stuff annualized by vendor, right?
Yep.
And when you break it out, we've sanitized this to protect the innocent or protect the guilty, whichever way you want to say. But I'll walk over here so I can look at it closer on my computer screen. But if you go to like rent, right? You would click rent, and the pivot table lets you do it by month, right? You can look at this.
Yes.
Okay. You can
Well,
do
actually,
it by,
let's remove that. There we go. That makes it a little easier. You
okay,
can see it by month.
yeah, so we're looking at months, our software expense. And then what it does is also when you click on each one, it breaks it down to, but what this does, this pivot table lets you look at every expense by month by recruiter, right? And you can by recruiter, every
By
expense
vendor.
by vendor, and go to consulting fees.
Okay.
And you can say, hey, we're not going to use vendor 343 anymore, right? We got rid of them. Boom. And you can just boom. Now you can adjust your budget by 34,248, right? The same thing, let's say with vendor 204. If you eliminate these vendors, you can see you would have a global impact on your budget. And that's what's great about this compared to just using the QuickBooks tool. You can do the same thing in QuickBooks. It just takes a lot longer. Why this pivot table, what did Travis has been creating these for a lot of clients. What's the last one took?
I mean, it depends. I'll say from QuickBooks Online, they take a lot less time. They probably take 45 minutes.
Mhm.
From QuickBooks Desktop, you can probably add another half an hour onto that, but it's
Yeah.
usually less than 90 minutes
Less than
to
90
prepare
minutes.
one.
So, yeah, you can create this thing, and you
And
can
I'll say this too, for those of you who may be better looking at this, say as a um, rather just the vendor rather than the accounts, you can kind of go that route, and we can look at it this way, right? You can take it and you can further high detail. Now we're just looking at vendors. So if that's easier for you to look at it like a vendor rather than from the account down, it's really a preference. The pivot table, for those of you who use it, it's a powerful tool. For those of you who haven't, you can do a lot of things really fast instead of having to rebuild these tables. And Mike mentioned being able to open up a detail of everything. That makes a big difference, especially like Mike, when we went through it, it was with ours. It was really simple. Just, hey, let's look into this one account and let's find that one particular item that's making this go so high.
right.
and that makes it quick. And you can see I actually had a note on one of these, eliminated for future use, right?
Mhm. Hey, Travis, if
forward.
you actually went into pivot table, now this is where you get dangerous. You can't like delete those numbers and change your totals, can you?
You cannot change the totals in a pivot table. However, you can change these names. But if I tried to change this, we can't change this part of the pivot table.
Okay, cool.
So actually, it can be useful. Say you have someone you want to do this for you in-house.
Mhm.
If as long as your data is protected, in other words, this data, then you're fine. That way you can mess with this all you want, and you're not going to touch your source data, which is
Okay. I see what you're saying. So,
yeah.
so you could also, what you could do is, like I said, you could take your original P&L or copy paste it onto another Excel spreadsheet, and just as you're going through it, you can say minus 15,000, minus 10,
Yeah.
and so forth on the column, and then you can say your new budget.
Yeah. Another little way that I've taken to doing this is for those of you who give me adjustments to make, I just make them out here, right? And we have adjustment columns, and we have 1, 2, 3, 4, and on down the way. And I can create kind of almost a footnoted key as to what those adjustments are. Mike mentioned consulting fees, and we had taken 50,000 off of that. I can just throw my $50,000 reduction off of the consulting fees, and then create my key at the bottom. Hey, we're not going to use vendor X, Y, and Z in future years, and do the same thing with any of these. And that way, I don't know how many of you have created a spreadsheet or a budget in November, and then you look at it in March and you have no idea where you came up with your adjustments from. This can kind of assist with that. That way we know why we made some of the changes that we made. And there are softwares that allow you to do that. Some of you have used Plan Guru with us. It essentially creates the memo that you can create in Plan Guru, but it's here on your regular source data where we're getting a lot of this from.
So far we've covered, hey, how to do an expense analysis. If you have a large cost of goods sold, I would recommend 2 pivot tables, one for cost of goods sold and one for expenses. We covered labor forecast, we cover operating budget. The other things that, what we tend to do, so the biggest thing when you do a budget or forecast is it's great to have a budget for your profit and loss. Now, to take that a step further, and you really want to almost predict the future of cash, right? So you want a projected balance sheet and stuff. There are certain other things that don't show up on the P&L that you should consider. The first thing is, hey, capital expenditures. How much of your cash are you going to put into fixed assets, right? Okay. The second thing that we debt. Okay, if you're buying fixed assets, what are you going to leverage them, right? Those are some things that you don't need necessarily for a budget, but you would need to do it if you wanted a forecasted balance sheet, because the big reason why what you want to get to again is where you can predict the future. And the biggest thing you want to be able to predict the future of is the cash in the bank account. Okay. And the third thing would be accounts receivable, accounts payable, I guess the third, fourth, and fifth, accounts receivable, accounts payable, and inventory. One of the things that why we like Plan Guru so much is we say, hey, what if your receivable days, instead of right now everyone's paying you good because cash is good, right? What if they went to 60? It will show you your cash balance, right? Same thing with accounts payable. What if we did the same thing, and instead of paying everyone in 15 days, we actually told all our vendors we're going to a 30-day payment? How does that affect our cash flow? And then, of course, inventory, if that's an issue, what if we've reduced our inventory, or what if we have to increase our inventory because, a lot of people, because of supply chain issues, have increased inventory. And that's created obsolescence issues, all that, but we're not here to discuss that. But,
but it is a drain on cash.
Yeah, big drain on cash, right? Especially when you're getting stuff from China, ports are closed and stuff like that. So everyone is sort of started thinking of different things. But these are other things that, again, for the sophisticated business owner, I mean, for your average guy running a small business, if you just did a P&L forecast, put it in QuickBooks, looked at it every month, you're ahead of about 90% of business owners. Okay. But for those of you sophisticated, you are going to want to, do a actually projected balance sheet and stuff. And but with that said, Travis, you got anything else to add? I believe we covered everything.
I think we've covered everything we're going to, but as per usual, if y'all have any questions or anything, please feel free to ask. I mean, some of these are more complicated than others, but we're always here to help, whatever we can do for you.
One thing I would like to say real quick is some of the common mistakes we see in budgets, right? Or the first common mistake is not doing it because you think it's too hard. Even if you just took the P&L from last year, spread it out, and added 3% to it, or do something and sort of monitor your numbers, that's good. So it's not ideal, but another mistake we see is stressing too much over the details of smaller numbers. That's why a lot of times, when we used to do budgets in great times, we would just take the expenses and add a 3% increase, for inflation, and go with it. Now, because we're a little uncertain, we want to really look hard at our expenses, right? And actually now I think, everyone is saying, why don't we do this all the time when times are good, right? Why don't we really monitor our expenses? But I see people stressing too much over
something that's $3,000 a year, whatever we have,
or something,
30,
right?
40, 50 line items. It's like we looked at on the spreadsheet a moment ago, right? We had 13 line items.
Right. And we saw that maybe only a couple more were a couple percentage points. So we could probably
Yeah.
had 17 line items. We could have had 90% of our expenses, call it a day, and be done with it.
No,
Well,
that's
cool.
it's absolutely true. And yeah, don't get bogged down in the details. I should have mentioned that because it's
Mm.
easy to do, especially for someone like me and maybe for someone in your office who's doing this. But if you're able to provide the vision and say, look, we're going to keep it on the top level, then you can definitely have this without too much effort.
And then the other big mistake we see is putting this together and then not looking at it again till the end of the year, right?
Mhm.
So what we suggest is you either using some type of dashboard that's hooked up to your QuickBooks that that shows you, hey, this is what we did to budget, this is our percentage off or something. Just looking at it every month and asking questions, right? The secret to business is not knowing all the answers. It's just knowing the right question. And hey, so that's a big mistake we see common. It used to be pretty expensive to get us involved in a budget. And we would get involved in budget. We'd do everything. It'd be an all day meeting. It might be 2 days meetings, right? And we would do this and then we do it. We'd put it in QuickBooks and client would never look at it. So you got to create a rhythm of looking at your budget or your forecast on a regular basis, right? That's probably the first comes to make, not doing one. Second, doing one and not looking at it. Third one is just beating people over the heads with the budget, right? And instead of asking the right question, hey, why did we miss this? Right? Why did
Yeah.
we miss this? What
And
caused us to miss?
that's not to say that you shouldn't have other people in your organization that are responsible for parts of that budget. But it's, you can have someone who's there to, your purchasing manager to look at cost of goods sold and all your purchases, or your
Mhm.
office manager to look at office supplies. But like Mike's saying, it's about asking questions. Hey, we missed this month. You don't get penalized for it, but you get asked the question and everyone, gets some accountability from it. And it's also not all on you. So that's the biggest thing. Um, no, I'm trying to think if there's anything that we've missed, because honestly, this last 5 minutes has kind of sprung more questions than anything, I think, and a lot of good information.
Awesome.
Is
Well, we'll
anything
leave it
else
at
come to you?
that. A couple of things. Hey, thank you for attending the webinar. We really appreciate you. One thing, if you need a copy of the spreadsheet, the labor spreadsheet, we'll gladly share that with you. And the thing is anything else, don't hesitate to reach out to Josh. He'll be sending this out and just say, hey, and if you have some questions, we'll be glad. We'll either, we're big at sending bomb videos or something. If you have a question, we'll try to answer those. We appreciate it. Again, our goal is to help you have a more profitable business, have a better quality of life, or a better way to think about things. Thank you again. Have a great day.
Thanks.